Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Man, I am way late. I honestly didn't realize. I just was too caught up in my thoughts while I was eating. But hey, let's come and take a look at the charts. I think things are gonna get really interesting here. Stayed up playing Minecraft too late, says Izzy. So yesterday we had the ADP news and we really jumped off of that. It does look like after we left there was a pretty deep pullback, which is pretty interesting. But they've recovered that and we seem to be forming a range here up at the top now. So we'll see where that goes here during this session. S&P 500 liked it. You know, they said, oh, well, we're going to get lower rates. It's good. This is just really, because remember that all this downside was like, oh, maybe they won't actually cut rates, you know, as much. They're going to cut, but maybe not as much, right? So now that that's out, hey, new highs, right? Pretty wild. Oil. Oil getting down to the bottom end of its range now. So that could be interesting. Do you think that it's going to break out, or do you think that they're going to find support here and just keep playing this game? And we got gold and silver. Well, they pulled back a little bit, but they're still eyeing new highs. Silver at 50. That's the big key level. Kappa's looking okay. 6J kind of holding its gains, and the dollar has actually kind of been, it's really interesting. I would have thought, or at least I seem to recall in past shutdowns, the dollar doing wild stuff. It seems to have been relatively tame the past few days. Maybe because if you shut down government operations, maybe some of the like departments that banks rely on for large transactions are down, and that's why you're not seeing as much movement in the. But I just don't remember that happening last time. It's been a while though. I honestly don't remember a whole lot about the 2018 shutdown anymore. And Bitcoin continues pushing up. I'm a little disappointed. I was really hoping down in here that there was like something really bad was going to happen, but they seem to have saved it for now. Let's see here. Stayed up playing Minecraft too late or Battlefield 6. Well, Battlefield 6 isn't out yet. I don't know if I'll buy it when it comes out. Honestly, I don't think I'll have the time. I do want to get... Oh, yeah, that's what it was I was going to do. I was waiting on paycheck for a couple of things, and one of them was to get Sonic Racing for the boys. So we probably will. Even though it's like $70 or something. Oh my gosh. But I think I am going to pull the trigger on that one. By the way, I'm sorry that I'm late. Because I've done so good at being here like at 6:20, 6:25, right? And part of that is because I got frozen breakfast burritos. But yeah, actually, you know what it was though, I'm gonna be more ADHD when I'm waking up, and you know, just what'll happen is I'll be showering and I'll be like playing out scenarios in my head or like giving speeches in my head, be doing that while I'm eating and like reflecting on things. And that's where it will be like, it'll take me forever to shower. It'll take me forever to eat. And then that's what makes me late. and staying up late can do that too. But I think I got to bed at a good time yesterday. But what it was is that I had a TikTok that did fairly okay. And there was all of these comments, and I thought some of the comments were really, frankly weird. I frankly, I thought it was weird. Here, hold on a second. I'll show you. It was about the shutdown. If I can remember how to do it. Your QR code. Nope, that's not what it is. No, over here. Scanning. Activity. This one. So I said, well, the Democrats want a shutdown. And so what were some of the comments? Well, somebody asked a real question, why are bonds going up so strong today? Well, that was just because I replied to that. Oh, it's just because of ADP. Oh, here's a new one. That's why Democrats are polling at about 19%. I think it's other things, but it's not helping them. I feel like it might be making things worse for them. And do they need to do anything additional to make Trump look bad? Well, I'm not going to say that Trump looks super great or anything, but he looks better than the Democrats right now. like electorally, Democrats are just getting absolutely pummeled at the ballot box. So I think Democrats feel that they need a game changer. I don't know. So there's this other thing. Like, do Democrats need a game changer right now? Well, Democrats need a game changer, but not right now. Honestly, if I was Democrats, my strategy would be, we're just trying to hold the horde back and limit the damage in the midterms, because the midterms are not favorable for Democrats. Wow, the Treasuries are really pushing right there, by the way. It's just not a favorable election cycle for Democrats in terms of like which seats are up. So I would be contain the damage and focus on 2028. That's what I would be doing as Democrats. But they think that they need a game changer right now. Okay, I get some comments that are like, when are we getting the list? I don't know. We could talk about the list, but you guys have already heard that argument, and I know nobody likes it, but it's the truth about the list. Here's this guy's talking about healthcare subsidies expiring. That's like really not related to the shutdown, though. I don't feel. But some of these ones, like Democrats never ask for insurance for illegals. No, it's like if you go in and read the bill, it's pretty explicitly clear. Like Republicans put language in the reconciliation bill that says Medicare funds can only be used for citizens, legal immigrants with a green card, and certain refugees. It wasn't even all refugees. It was just like only Cuban refugees or something like that, right? And gets repealed by, like, Democrats' bill is basically, this section gets repealed. There's other things in there, granted. There are other things in there, but it gets rid of that thing. It's pretty explicit. And you could argue, like, I think the one person in here said, well, like, that doesn't happen, though. Like, people aren't actually using that. So money is not being used on illegal immigrants. Okay. Maybe that's a valid argument. Like, I'll give you that one. Doesn't mean that Republicans are going to vote for it, right? that repealing that section, anything that repeals that section, Republicans aren't going to vote for it. Period. And Democrats know that. Because my whole argument here was, well, Democrats want a shutdown. I'm sorry, but there's just no way around it. Democrats want a shutdown. So I think some people are trying to play this by the playbook of last time. You know what I mean? It was like, well, there was a shutdown, and then the shutdown really came down to this battle of public opinion as to whether the public thought that Republicans or Democrats were more at fault, which I always thought was kind of a silly kind of argument. Like, neither side can unilaterally end the shutdown. They both have to vote in favor of something to end the shutdown. So if a shutdown happens or it's extended, both sides share some blame in it. And I guess in a lot of polling, people do blame both parties, right? I always thought that was a weird kind of an argument, but that was the play. Like, the media framed it in that kind of way, and the Democrats won that kind of media battle. And so I think that a lot of regular people that are Democrats that want to go and comment online and help their party, they go, oh, okay, so we just need to go and pull out the 2018 playbook. No, it's a different game. It's a different game. It's a different game because Democrats explicitly want the shutdown. So really, you have to think of this as a war of attrition, actually. So what this is. Shutdown has certain negative impacts. And Donald Trump has basically straight up said that he's going to make those impacts worse by permanently firing mass numbers of people, and that should happen in a few days. Okay? So this is really that there will be pain, there will be collateral damage, and how much can they stomach? That's really what this is going to be about. And really, it's kind of, I think, it will come down more to how much collateral damage can Democrats stomach. Because I do kind of think there will be a point at which, people, like, the pain will be mostly concentrated on the Democrat side. People are going to start complaining. And so it will be the Democrats under pressure. How much pain can they stomach? That's really what this is going to be about. I don't see how that helps Democrats, but I think that their thinking is kind of that if things are really bad, that hurts the current president and their party. So especially from an investing perspective, but also if you're like in a political perspective and you're trying to predict, what will happen in the next midterms, how's this going to impact things, right? I think you have to look at it as a war of attrition, and that means that I would not expect the shutdown to end anytime soon, because it's not going to end until Democrats are really, really feeling pain. Which kind of sucks. I mean, I'm a little bit concerned. Like, laying off mass numbers of government workers, maybe you don't actually need those jobs. Maybe it is saving the government a lot of money, but it has a negative impact on the economy. It does. And there is absolutely a scenario. I'm saying it's like my primary scenario, or I'm predicting that this is going to happen, but there is a risk that shutdown could single-handedly lead to a recession. You've got to consider that if you're an investor right now. But at the moment, they are selling these treasuries, aren't they? And Uzi said 210 to 22 half. We're already there. Curious. Well, I'm a little bit okay. So this will be a good test case. Oh, by the way, we should have the robot on. I bet it would have taken a trade off of that. Oh, it's kind of mad. Well, let's come and see what it would have said. It's pretty rare for you to have a move that far and the algorithm not catch it at some point. So it's a question of where it would have caught it, right? It might be a 30-year day, so watch for 08 to 09. Oh, that's way far down there. Are you kidding me? Wow. That's a little scary. But like, let's come and look at the flows for a second. Okay. So in the 10-year, do I have it? Let me, you know what? I need to restart the pen. I messaged these guys once, like, I think that there's a memory leak in your application. And they're like, no, it's okay. No, it's gotten worse. There is a memory leak. And if you leave it open for multiple days, it just dies. Becomes unusable. Hold on a second. Did I say, are you kidding me? Oh, I'm just saying 08 to 09 is really far away. Yeah. I shouldn't, I'm not trying to say I don't think it will happen. But here's what I'm seeing happen and why I think this is going to be an interesting test case for us, okay? If I look at the 10-year, meh. There's not that much selling in the 10-year. Okay. When I look at the 30-year, it's about 2,000 contracts. So I would say that that's about average. When I look at the 5-year, that looks like an average downturn to me.
Submitted.
But it's curious that it is here and here. Okay. So one might think, because we're hitting the number in the 10-year, one would probably be thinking that the play at this point is to play for a reversal, right? Something like that. But what concerns me is this. The Japanese yen is moving. Japanese yen is moving. And it's not moving with the dollar either. The dollar is not moving. So that's concerning. If the Japanese yen were to continue through, I would think that the rest of the treasuries would follow it. Yeah. So that's why I think it's a good test case. Because we would expect it to pause, if not bounce here, based on what the behavior that we've seen so far. But I don't think that we've seen a move that was driven by the Japanese yen as much. And so do they still apply when a correlated asset is just getting absolutely creamed? Because my feeling on these kinds of moves is that when it's driven by the correlations in the Japanese yen, that it's kind of like the treasuries ignore all of the things that they would normally heed. Know what I mean? Now, with that said, the robot did get triggered in along there off of a spurt of volume to the long side, which I kind of feel like I'm surprised that was enough to trigger it, but and it was a very brief spike, but it did go long. So I think you've got two things kind of supporting a long here. Two things kind of supporting along. I don't know. So I was watching who what's his name? the delta trend guy. Because the thing that he's going on now, and I think it's a great content strategy, honestly, is he was like, well, price action doesn't work, but here's something with machine learning that will help you with your price action. Because your problem with price action is it's a good price action day or it's a bad price action day, right? And so he said, okay, well, let's just look for days with that it moves really. There's a wide range, and the activity is pretty much all skewed to one direction. So basically, trend day, right? Because those are the days that the price action guys say should like do the best. And I kind of laughed because, you know, he doesn't trade price. I don't think he does any kind of short-term trading. But my observation has been that those are the days that the price action traders do the worst at. Those are the days that they're absolutely the worst at. And why is that? Well, you get two sides. One is there's a group that really what they're doing is they're buying the dip. So if they buy the dip and it keeps going down, they just get absolutely slaughtered, right? So
canceled.
This set of price action traders, they do poorly on those days because they're trend days and they are mostly fading the trends, right? And then there's the other group that I don't trade price action, but I do kind of try and get in on a trend, right? I try to predict that a trend is going to happen. And the issue that you get on that one is if you miss the initial good entry, then it gets choppy. And it will be kind of like it'll move up and then it'll be really choppy for a long time and then it'll move up. And if you're not in on this, that happens really quickly. You just miss it, right? And it tends to be like this and then like this, or and these guys, they'll get in here and then they'll get stopped out here, right? That is where it doesn't work for them. And it's like holding Play-Doh. It's like trying to squeeze Play-Doh. You've got a ball of Play-Doh in your hands, and you're trying to compact it as tightly as you can. And what happens? The more that you squeeze it, the more that it just squeezes out between your fingers, right? So you can come in and you can, every time that you add a filter, there just always seems to be some radical, unpredictable, inexplicable variable in there that screws it all up. That's why you still get this chart where it's like that. There's like this is edge, and this is time frame, and like there's edge on really short time frames, and then you get to like retail trader time frames, and there's no edge, and then on longer time frames you get momentum and value and things like that, right? And you're in this gulf, and for some reason when you're in this gulf, it doesn't matter. You have a really good signal and you apply all these filters to it. It just seems like any filter that you apply, there's still some radical variable that you have to control for that makes the strategy unprofitable. And so that's what's going on here with us. Is I think that we have found something that I think is kind of important to note, because there's a bunch of different ways of looking at volatility that we've done it from, right? We've looked at volatility from average true range perspective. We've looked at volatility from looking at the VIX, things like that. But the measure that Uzi is using, my understanding is that it is the implied volatility from the at-the-money options on the closest expiration. So you basically, you look at the expiration that would for the, you know, the next one would be the 17th, right? You go and look at the options that are at the 17th, and then you look at the money options, and you look at the implied volatility implied by, yeah, the closest monthly. Because I don't think that he's looking at daily or weeklies or anything like that. Yeah. The closest monthly, and then you're looking at the implied volatility implied by the at the money options. I don't think that one is looking at like all of the options and making like a like an average of them or anything like that. It's the at the money option, right? So the market seems to react very strongly to the at the money option, and I think intuitively that makes sense, because the majority of the market making activity going on here are hedging with options. Ergo, when you get to those points, they have to do stuff, and hence you would probably see activity. But what is that radical variable that you have to deal with? There's two. One is, we're just starting out and you have a range and you're in the middle of the range. Which side is it going to attack first? That was our problem yesterday. I picked wrong. Right? And then the other one is the fat tail. That it will probably turn around here most of the time. But when it doesn't, when there's something like a currency, by the way, it looks like the Japanese yen is moderating. So maybe I'll put an order here to see if I can get filled. Okay, well, that didn't work out very well. I think I might be too late on it. But the other one is the fat tail. Yeah. Just don't use. I don't think that solves it though, Uzi, because you still get this issue that's like, okay, the larger your stop is, the more you limit the fat tail, but the more often that you're also going to get stopped out of good trades. So they tends to all balance out. I think the only way that it balances out is if you are able to use the other information that you have to increase your probability, right? Know when we've gotten to that point that it's very unlikely to be a trend day. So I feel like this situation, this is why I think this situation is kind of interesting, because with everything else going on, I mean, we didn't get the unemployment claims today. What do we get? We do have a PMI though, don't we? I might need to come in here and refresh Financial Juice actually. Oh, maybe not. We did get Challenger layoffs. That was a long time ago. It was not as high as expected either. Oh, maybe not. So maybe we just really don't have any data today. We don't have tons of data. Why would it why would it be a trend day? Doesn't make sense, right? But there's this Japanese yen thing moving. So I've got to worry about, there could be a big transaction going on in the Japanese yen. It pulling back there in the Japanese yen, I think gives me enough. I think I was late. I should have just hit 22.5, huh? But I'm kind of thinking, well, I want to get as good as the robot. I want to get as good as the robot. By the way, why does it say -2? Because it went short. Oh, that sucks. Well, now I'm doubling, because I thought that the robot was still long, and so I'm like, oh, maybe I don't have to hit into it. Right? I can add one there. So if I'm able to eliminate the risk of a trend being created by the Japanese yen, then I think we have a good trade, right? Because we're using our information to give us a better percentage chance on it, right? Let's see here. Either trade is a killer risk reward profile. Okay. Well, so let's talk about that, because if let's just say that we got 22, what would our targets be? Because you've said some stuff about that, and I don't understand where you were getting those numbers from. Or at least I don't remember where you were getting those numbers from. I'm thinking 25. Read the entire comments. Can aim for the other side of the range. Use the ATR for a particular time frame to set your stop. Oh, okay. 3.6 on the 10-year right now. So let's make it an even 4-tick stop. Take along somewhere in that. And for the other side of the range, 113. Whoa, wait, what? You're saying... Well, let's just say that we got 22. Right, aim for the other side of the range at 113. Oh, 113 evens. Whoa, okay. Okay. Or if you're conservative, 26 half, which is the RTH open. Why the RTH open, though?
Order canceled.
I don't know about that. Okay, keep reading. Either trade is a killer risk reward profile because it's based on the market order imbalances and 24K hit into the bid at 22. So the robot ignores context and just, oh yeah. No, it's stupid in those situations, right? I really, you know, it was frustrating to me. I wish I had more time. like honestly, I could work a full-time job just programming shit, right? I could probably occupy a 5-person team just programming stuff, right? I really want a better filter on the robot. You know, in this situation, I liked this long. I didn't like this short. I wish it was still long. How could I improve the robot in that particular situation? I think we've had a lot of them. I gotta run. I think we've had a lot of them where I feel like that the filters could filter these out. It's like, well, this is bad action. You just shouldn't take any of them. But how could I make a filter that would have caught this one and not this one? I don't know. Maybe there's nothing you can do about that one. Yeah. Anyways, need to program more. But I am surprised by the numbers that Izzy's given me there. That he's saying aim for 113 even. Like basically the theory being we're going to get, it's going to completely reverse and go to the complete other side of the range. That doesn't really make sense to me. So the price that I picked, 25, is based on inventory cost basis. Based on the inventory cost basis. Because generally speaking, I find that this to this, well, it has happened this week. It's happened a number of times this week. It's really the thing that's been weird about the action lately. Because usually it does this. The treasuries, right? Or it does this. And I'm looking for it to do this. And that's where this is going to be 25. That's where it tends to balance back out. It's like the market makers, they go back to where their inventory is and they scratch it all out. Okay, well. Now, going back to this one, Was there something that could have told me gotten in a little earlier? Well, I could have gotten in a little earlier, but I don't think that I would have gotten in early enough to get filled. Because the thing was, is the Japanese yen reverted enough? And when it did, it had already kind of ticked up. So I think that I would have missed that one anyways. I would have had to have been really, really gutsy and had been saying it's going to hold, you know, before that, and not worried about the Japanese yen. Now, if Uzi's right and we do get back up to 113 evens, that makes me think about, like, what really is going on in this market. I'm honestly a little bit, I feel that the downside that we saw at the beginning of this session was a little surprising to me. I did not expect to see that much of a downtrend. Why not join ZB 836 lots? Because ZB scares me. ZB scares me. So what time is it? 7:11. So still 20 minutes until the S&P 500 opens. The SPOOs look like pretty good at the moment, but I don't think they've really started yet. So should keep an eye on them. I wanted to read what this were. Democrats never asked for insurance for illegal LOs. They did not want your health insurance to go up. Republicans always plan to shut down the government. Well, I think that Republicans thought it was going to happen, maybe. But like, it's just if Republicans had voted on a measure that repealed that section, like, none of them would get reelected. Like, they literally cannot vote for that. Okay. Trump administration officials have said they plan to use a shutdown to reduce the size of government, moving to cut jobs across agencies. Plus, this prevents any vote to release the Epstein. Why are they? I tell you what, man, it's really wild to watch how easy it is to manipulate, like, sentiment and the issues that people care about. Because the Democrats never talked about the Epstein files. It was always a conspiracy theory and all of this. And then once they found out that it was kind of like hurting Trump amongst his base, it's all they can talk about. And they will bring it up every time, regardless of how irrelevant it is to the thing that they're talking about. It's really, like, to somebody that wants to have, like, real, like, I'm coming in here, I want people to understand what's going on. Not because I think that it's going to make them a Democrat or a Republican, but because I think that there's real consequences to these things to you, and I want you to be able to understand what you're going to have to do. Right? The administration plans to use the shutdown to reduce the size of government. That's correct. That's the real thing here, is that Democrats know that he's going to do that, and Democrats think that that's painful. And they're probably right. There's going to be some real pain from this shutdown, I think. And you're going to have to look at that and say, okay, will that really affect me? Can I withstand through that? Because it's going to be a war of attrition. It's going to be which side can stomach the collateral damage. Which side can stomach the collateral damage? But they did ask for insurance for illegal immigrants. They want to repeal the section that prevents the Medicare fund overages going to illegal immigrants. If this were true, Republicans wouldn't have passed a clean budget resolution. Democrats are the ones tossing in changes. Well, I do think it is the case that the Republicans would rather keep the government going than not. They only wanted, that might be accurate, but the getting rid of the explicit ban on illegal immigrants getting that money would happen too. So like if this is really what you want, like if you're a Democrat and what you really want is you think that reconciliation bill will make health insurance rates go up, then the solution is don't just repeal the whole section. Just rewrite the parts that you think increase the cost of insurance. I guess though, reading this again, not as many people were. I was shocked that there were people that were disputing the whole thing, because I can go and read the bills for them, and I'm like, is people really that far crazy? I don't know. That's the only ammo they have on Trump, so of course they try to shoot shots about every single. Well, you know what? Let me tell you, I was kept saying to myself, I'm not going to talk about it. I'm going to talk about it, okay? But I'm not going to go like full bore on it. I think that there is probably intelligence agencies involved in that situation, and that anything about that is not going to be in those court documents. So even though there probably is and could be information out there that I think that the public would really like to know, and information that could be damaging to certain politicians as well, I don't think that any of it is contained in those court files. And I don't think that it's okay for Congress to come in and unseal court documents that the judge has sealed for a good reason. To just come in and undo that for political hit points. I don't think that that's okay. So the only way, and this was, I was this way when it was Republicans talking about releasing it, right? My opinion is that the only way it should be released is if the judge says that it's okay to release them. And otherwise, I think it's a terrible precedent to set that we can unseal court documents from a vote by Congress for political reasons. And I don't think that there's actually anything worthwhile in them. There's probably worthwhile stuff to know, but I don't think it's in those documents. Sherlock, can you explain how gamma exposure helps you as day trading? Okay, so one of the things that we were looking at is just based on the implied volatility, how far are they likely to move? Where is a spot where it's going to be harder to move, right? And why does that happen? Well, maybe in part because if you have a big options position, so what will kind of happen is I will be selling, let's say I'll be selling calls. Right, I'm selling calls in order to hedge myself for that, because if you sell calls, that means that you make money when it goes down, but you lose money when it goes up. So if you don't want to be exposed to the absolute movement of the stock, you're going to buy the actual underlying to hedge those calls that you sold. Okay, I know it might be, don't try and flip it around. Just listen to what I'm saying. Don't, if you're not that up on the options, like selling a call is positive, negative. Okay, you're selling calls, you're buying the outright. Okay, then what happens? We get down to here. Okay, well, what is gamma? Gamma basically says the further away from the strike price that you get, the more the value of the option changes. Okay? So let's draw a picture. Selling a call means that, and here's like the current price, here's the strike price, okay? I make a certain amount of money if it's below that, and then if it's above that, I lose money. It's bad, right? The problem is, and then what I've done is I've hedged myself so that I can only lose that much, okay? The problem is this is not actually a straight line. It actually curves. It actually curves. And that curve, so like the slope of this line, that's delta. The curve, that's gamma. Okay? So if you know what their gamma exposure is, then basically you know the point at which it's moved far enough away that their current hedge is no longer sufficient. That makes sense? Their current hedge is no longer sufficient. So they will start to add more contracts in this place. So if we had to move up, again, this is a guy that's bought. If it moves up, now all of a sudden, for every tick that it goes up, they're actually losing more on the option than they are making up from holding the underlying, which means that they have to add more underlying contracts. So they're going to start buying. So it depends on their gamma exposure, but in this situation, we're saying that they have negative gamma. And what that does is, once you cross this threshold, it actually makes it accelerate because the options market maker is buying more. Okay. So there are services out there that kind of do all of the math and calculate this for you, and they can show you key levels where the market's overall gamma exposure changes. And my recollection is that if it's places where it's negative gamma will basically cause the market makers to extend the trend, and places where it's positive gamma are places where it's likely for the market makers to go against the trend. So even though I don't have the data here in front of me, based on the way that it's been acting lately, we're probably in positive gamma territory, right? Every time that it gets to those kind of edges, you get mean reversion. So that's what that's all about. Order flow has so many tools, from the footprint, the DOM, market profile, etc. As a beginner, what should I focus on first? And do I need to incorporate everything? No, I would focus exclusively on the DOM. All of those other tools are basically just other ways and other timeframes of looking at what happens on the DOM. I really don't think that footprint tools are that useful. And I actually would discourage you from studying footprints for the pure reason that most of the people out there teaching about footprints will teach you technical setups that are useless. What you really want to learn is order flow in general. So like order flow meaning this particular type of data and the methods of studying that data, and in particular, some aberrations in that data, right? Because if we come in and we look at a chart of price, all of the empirical studies that we've had on price essentially say that prices are martingales, that there's nothing in the past price that is very effective at predicting the future price. And the only aberrations, like the statistical aberrations that we find in price itself, have more to do with volatility clustering. That when you have large volatility, you're likely to have another large volatility day, right? So there's that. Those are the things that to take advantage of explicitly, you need the options. Okay, so those are inefficiencies that in market volatility, right? Okay. But overall, not a whole lot in price itself. But when you start looking at order flow, there's tons of them. One of the best known ones is that if you look at what price the volume was actually executed at, you will tend to find a Gaussian distribution, which kind of doesn't match if everything was just random. Okay. And we know why that happens. The reason that happens is because the latent liquidity in an area will become low. And so there's like not a lot of liquidity here, but there is more liquidity on the ends. And so that makes it difficult for it to move outside of that area. And it stays in that area for so long that a lot of volume ends up trading at that price. And that's why when you look at the volume profile, you get this Gaussian distribution. So that's why that happens. Can you take advantage of that in your trading? Maybe. I think the thing that's most useful in that is to understand why, why there are some points, like right now, that hasn't really done much. It's just kind of rotating around 23.5, right? Why it sometimes it will just stick in an area, and when it might be time for it to move. Which, given this one, I think we're probably within the window where maybe there could be another move in the next 15 minutes. Okay. Anyways, so that's one. Okay. Another one is that there is a high degree of autocorrelation in order flow signs. So that is to say, if I look at an individual order and I look at the best bid, best ask, I can say, because that one lot that just went off at 23.5 went off at the best bid, that means that that order was a market sell because it was hitting the best bid, right? So now that is the sign of that order. The sign is negative. It was a sell, right? And what we'll find is if I randomly select an order and I find its sign, and then I come back an hour later, there's a 0.5% higher chance that it will also be the same sign, that it will be of the same sign. So there's strong autocorrelation. That is, if there's more market buys than there are market sells, that imbalance tends to persist over a long period of time. And there are theories about it, but the scientific community is starting to coalesce around the theory that happens because of really large meta orders. There's guys out there that need to buy or sell a ton that create those imbalances between market buys and sells, and it would take them all day to execute. So if you come in here and you can see that one of those guys are executing because there's more market buys than market sells, then they will probably continue to have that imbalance through the whole day. Okay, so there's another explicit thing. I want to come in and look at, which side of the imbalance we're having happen and go along with that one. And understand how those guys execute and the timing of it and everything so that I can kind of position myself for this. Right? So those are the sorts of things that you want to learn. And I have a video series on if you just go to my channel page and there's like the order flow video series, and I teach you everything that you need to know to understand those things. And I teach you how to read the DOM, what you're looking at, and then the empirically proven behaviors in there. Okay? And that's what I would study. And then I would understand that is just purely the technical side of it. The technical side of it only does so much. To really have success, you still have to be able to predict orders. So watching the DOM, that gives me a really good idea of like what it looks like. What is actually going on right now? But to make a good trade, I have to be able to come in and say, there's this guy, because of X, Y, and Z reasons, he's going to buy. And when he does, it's going to look like this. And that's where you get really good trades. Okay. Which means that after that, the things that you should be studying are the things that we try to talk about, like what kind of order flows are likely to be triggered by a government shutdown. Things like that, right? What are some things that can effectively predict those future orders? They tend to be informational things. So then you just want to learn as much about the market and particularly about your particular market, whether it's treasuries or oil or whatever. And then that's where you should be learning, right? First you have to study the order flow so that you actually understand what you're looking at. Now you have the tools to be able to understand how these different factors affect people's orders, right? You have to understand how to look at orders, and then you can understand how different information will affect people's orders. That's how I'd approach it. Focus on depth of market and microstructure. There you go. Yeah. So these when we say microstructure, these aberrations in the data, they have microstructural explanations for why they happen. Like I explained to you, the reason why there's a high autocorrelation in order flow signs is because of how large meta orders are executed over long periods of time, right? If there's like a real statistical aberration in there that's persistent, that usually just can't be explained by, like, people tend to be like X, Y, or Z. It's usually something built into the rules, the way that the market actually works, that creates those. So that's what market microstructure is essentially the study of how those rules lead to those kinds of behaviors. Bookmap. Oh, did he ask about? I didn't see where he asked about Bookmap, but I prefer Jigsaw. I am an affiliate. There's an affiliate link in the video description. But Bookmap's not a bad platform. Truthfully, most went over my head due to the terminology. Maybe. I think what you're gonna find, James, is that the things that I am saying are so different from your expectations that your brain will feel like it doesn't understand it. But what will happen is you'll go to sleep, and while you're sleeping, you will grow new brain cells. Brain cells will adjust themselves. They'll make new connections, things like that, right? I don't know if they actually build new brain cells, but I think that you do continue to build brain cells, right? Anyways, you got to realize that learning things makes real physical changes in your brain, right? So whether you're new or you've been trading for a while, you've built all of these structures in your brain that are completely unsuited for actual real trading. That's the real problem, right? Is that you should be training yourself to read and understand the orders, and then read and understand how different information out there, different things happening, are leading to those orders. That's what what you want to train your brain how to do, right? So you go to sleep, you make those new connections, you come back and rewatch this stream, and it won't seem nearly as confusing. You'll kind of be like, I'm not quite sure I remember what it was about it that was so confusing, because it seems so plain to me now, right? Or maybe you don't rewatch the stream, you just go and you watch the order flow video series, right? And then you'll go through and you'll watch the order flow for a while, couple weeks, maybe come back and watch those videos again. It'll make more and more sense because you're building those brain structures. Okay. So hearing that explanation and feeling like it's going completely over your head is actually probably a good sign. If you'd never heard that stuff before and you think you understand it all, that's kind of like a red flag to me, because you haven't built the brain structures to understand it yet. So why would you understand it? That must mean that the person is not very self-aware. They don't really understand it, but their brain is telling them that they understand it because they don't want to hurt their ego or something like that, right? It should be difficult to understand at first, but you'll quickly realize that what I'm saying is actually not that complicated and pretty straightforward. Something that really, really irks me. I was talking about this on Reddit the other day, because they were talking about Al Brooks. Yeah, I'll use names because I just don't really care about him. He teaches price action, and the criticism of Al Brooks that I always see from people is that he'll come and pull out a chart and just use all of this esoteric language to say all of this stuff about like literally every bar, and it's just a mess of information. And the problem is he's giving you all of this information that like just doesn't fit with anything. There's no empirical data behind it, so there's no way for you to know, like, in this situation, does this piece of data matter more, or this piece of data matter, or does none of that data matter? Because there's no hard proof to show us that either of them does, and that drives me crazy. I think that is like a big red flag that somebody is a charlatan, is that they try to obfuscate the fact that they don't have any edge by just bombarding you with so much information that you can't make sense of it. Right? Now, I do give you a lot of information, and I'm giving you a lot of advanced information, so it takes time to study, but you're actually going to see like there's a specific set of things that we're talking about that we can prove, and how those things can help you, and what the limitations of those things are, and how you have to be able to use your knowledge of the market to make up the rest, right? So it is actually, a limited, a set of information that it's hard to understand at first, but you will understand it very quickly. And I've never had a person come in and be like, oh, I've watched your video multiple times and I've been following your stream for months and I still don't get it. Never happens. Never happens, because once your brain builds the connections, it will almost become second nature to you. Okay? So wanted to bring that up because that's a point that I feel really strongly about. Like, I don't know, like larger picture, I guess one of the things I'm thinking about is like branding and stuff, because I really do want more people to understand this. I don't necessarily think that like lots of people are going to make tons of money from it. Like the reality of the market is, even if you're really, really smart, you might not make a ton of money, right? But I want you to understand what's going on at the very least, because when you understand what's really going on in the market, it can affect you in other ways. You might not make a ton of money from scalping the 10-year treasury, but you will make a ton of money from knowing when is a good time to buy a house. That's probably, the best financial decisions I've ever made in my life. Wouldn't have made them if I didn't understand these things, So we want people to understand them. And like the reality of our industry, like retail trading industry, is that practically everybody out there is just gambling. They think that they're looking at information that matters, but all of the empirical evidence that we have says that what they're thinking about doesn't mean a thing. And if you really want to know what you're doing, you need to understand order flow, understand the the statistical aberrations in order flow and the microstructure that leads to those. And then understand the limitations of that information and understand what's going on in the current market so that you can use informational inefficiency, things that you know that other people don't know, to give you an explicit edge. And then you will be an informed trader, and you know more about what's going on than like 99% of retail day traders. You might not be rich, but at least you know what's going on, right? What are you asking about currencies? I really don't like trading currencies. This comes up like every week, doesn't it? Currencies, but I don't like trading currencies. Currencies are the hardest to trade, folks. Like if you go and you become a trader, right? And they want you to trade on the currency desk, that's kind of like a ooh, because that's the hardest one. Currency desk is the hardest one to play. People like professional traders fail the currency market more than any other. So I gotta go back because there was some other stuff earlier on in the stream that we wanted to talk about. Oh yeah, Lucas says Norton released another hit piece on prop firms. Oh, that's interesting. You know, he has, I think he's been trying harder on his YouTube channel, which I applaud. But I honestly haven't been watching him as much lately. You know what? I don't like what YouTube recommends anymore. This doesn't seem to be as good at making the recommendations. I don't see a new video from him. His last video was, what does trading consistency look like? That I suppose could be a criticism of prop firms. Okay, is there news there? I haven't heard anything. Let's make sure. You know, I don't recall hearing anything from my news squawk. Sometimes I screwed up and I don't realize it. Something defo happened there. I'm not quite sure what to make of it because the market's been relatively quiet and then it just all did a bunch of stuff there. And like a bunch of selling came through. If there was follow through on that selling enough to push it through the 22 area. Okay. Well, my new squawk is saying Tesla is moving down. So it could just be because the S&P 500 just turned down. Oh, you know, we didn't even notice. The dollar is moving. Is the Japanese yen making another move? We could maybe... so in this situation, like let's say that we really did want to hit this. I could like try a stop limit at 21.5. So that if they do start to sell that price, then I can get involved in it. and then we see if they have the extension. Because Uzi was saying like 13 down was like the next step, which seems like really far. But if the dollar's going to move like that and they really do bust those lows, I think it's totally within reason. Okay, well, one headline that I am hearing is the Kremlin saying if Tomahawks are supplied by the U.S. to Ukraine, then Russia will have to give an adequate response. Would mean a serious round of tension. I do think what we're seeing may possibly be a reaction to that. But that wouldn't be a short, would it? That would be a long. Oh, and the robot's probably going to take a long here in a second anyways. It's going to flip around. I'm going to leave that there because it could change again. Let's just see. There might have been multiple headlines, you know. I don't know. There's more on this thing. I tell you what, the way that I'm seeing the media respond to this shutdown is completely different from the past shutdowns. Maybe, well, the S&P 500 turned up when the Treasuries turned up too. That is very curious. Granted, it's only like 5 points or so, but still. But the big thing here is the dollar really moved there in the last 10 minutes or so. The Japanese yen didn't move as much. It was driven more by the euro that time. So that does make me think that it's got to be related to the Kremlin talking about Tomahawk missiles. So interestingly, when I woke up this morning, the first headline that I saw was that the Kremlin doesn't think that the U.S. will provide Tomahawk missiles. I wonder if that was kind of like the media prodding them, like, well, you're not going to let them set a red line like that, are you? So now the Russians are like, oh, we've got to, before they actually do decide to do it, we've got to tell them how bad of an idea that would be so that they understand that it's like a red line. But then if they put a red line like that, wouldn't Donald Trump be likely to want to just, you know, do it then at that point? But I'm coming around to the idea that the movement is related to that, which I don't really think should be a strong, persistent flow that would really matter in the long run. But, you know, we did have that short move, and it's coming close to our time. So that might well be the last thing that we get to see today, and then we can see where it goes from there. I would say to the trade they were talking about with Uzi, I think that I was right. Don't you? I don't know. So let me come here and make my case. I said we get into the implied volatility limits, so we should fade it We don't have a reason to think there will be a trend day or that they'll continue to push through this. And we saw the Japanese yen was kind of a part of this trend. The Japanese yen backed off. So if we're going to take a mean reversion trade, where do we think it should go to? And he was saying, well, if it went all the way to the other side, it would be 112 or 113 even way up here. And I was kind of like that. I don't know. That seems a little fantastical to me. I always like to see it come back to the inventory cost basis lines. Oh, wait. What's that? It literally went to it, one tick through and then reversed? Huh. What do you know? Now, was from 22 to 25 worth it? 6 ticks. I mean, I guess I would take it. I don't think that I got into it early enough, but because I did try and put an order there, like on Sim, but that time the take profit strategy worked really, really, really well. But again, something's happening here, man. I know. Like here's the move up. Was that Russia? But now we're coming back down pretty aggressively. Well, I think I want to see what happens if it triggers there and all, but I don't think that it's going to do it soon enough for me to keep it on there because I'm not going to be able to watch it. So I'm going to take it off. Blue Line Futures reports U.S. to support soybean farmers amid China lag. Expect Tuesday. News Besant says. Let's see here. Is there anything else that I missed? I felt like that there was a bunch of questions that I was afraid I was going to miss them, and I think we got them. We have suspended. We do. We did not get the weekly jobless claims today. So again, I don't remember like economic reports being delayed because of a shutdown, but at least not during the 2018 shutdown. I wasn't trading futures when the one before that happened. The one during Obama. I do wonder. So for tomorrow, yeah, we're that's interesting. So when I look at Forex Factory, they have it listed as tentative. Yeah, they have it listed as tentative. But from what I've been seeing, I think they don't think it is going to happen. But I guess we would get information later as to whether it's canceled or not. I don't know. I kind of wonder, like, how do things happen over there they're really doing stuff on the 2 days before the non-farms report that the government shutting down would prevent them from releasing the report? Or would it just be like, well, we can't release the report if the government shut down, even though the report's totally there? But the more interesting question in my mind is, well, the non-farm report is kind of useless anyways, right? Like, at least the initial number, I mean, I'm kind of starting to realize maybe the revisions matter more than the initial number. But that initial number that you get seems to be so far off from what the reality ends up being that it's really completely useless. So are we really losing out on anything if we don't get this report tomorrow? I don't know. Maybe some independent corporation will do some survey that is better and replace it, you know? Who knows? They're definitely like out there, like all the traders out there looking for like every report about employment besides that non-farms is like being given more importance, and they're out there searching for them and stuff. So kind of wild. But yes, on my calendar it says tentative tomorrow. But tomorrow we do have ISM services PMI, which is an important number. You will still get that because that's a private report from ISM. So, yeah. I feel like today with the robot that it was like if you just outright faded the robot, you would have done well. Because like that short right there was like at exactly the wrong spot. You control the House, the Senate, and the presidency. Tell me again how it's the Democrats' fault for the government shutdown. Remember when Obama was president, but it wasn't Obama's fault for a shutdown? You know, when you get one of these things and it's like, well, neither of those make sense, and it's difficult for people to square it away in their heads. And so I think that you're kind of utilizing a logical fallacy that confuses most people, and it's effective because of that. But I don't think that that's what's going on in this situation. In order to pass a bill, both sides have to take positive action. So if it doesn't happen, you can blame both sides. And that's what most people do. So I don't think that most people are affected by that propaganda. Instead, I think what most people see is, oh, well, you blamed it on Republicans when it was the other way around. And now that the shoe is on the other foot, you still think that it's Republicans. And it just kind of makes people not take them seriously. That's what I think that does. So, you know, something I see a lot about on Reddit is this whole thing about anyone who participates in the Riyadh Comedy Festival needs to be boycotted and blacklisted. I don't get why it's so awful to have performed there. Let's see here. They have slaves, they kill journalists, and execute people. Yeah, but that doesn't necessarily mean that they have to be boycotted. Like, they're going to pay money. I think that, you know, providing comedy to them is like a good part of diplomacy. Like, that's a way to influence people in your direction. Like, just cutting them off is counterproductive. What platform do you use for the dumb? I use Jigsaw Day Trader. I am a Jigsaw Day Trader affiliate. I have a link in the video description. Yeah. Well, there was an awfully big iceberg at 23.5. So it looks like it is consolidating on there. It still doesn't really explain that kind of burst of volume that we had, but it's time for me to get going. So that's all we have time for today. It'll be, you know, they're talking about Uzi was saying, well, like 113 on the upside. Could still happen, right? Because that's, you know, in past few days, that's one of the things is like after we left, it did go all the way up there. So we'll see. But it looks like today, the mean reversion trade was correct. There wasn't a ton in it. You know, you would have much rather have had the short, the original short, which I felt was kind of a freak one and we completely missed anyways, right? So I will see you guys tomorrow. It should be an interesting day. Maybe they will actually have the non-farms report. I don't know. I don't know what's going on. So join us for that cliffhanger. In the meantime,